Hello, everyone. This is Martin. Welcome back. Happy New Year 2017. Hopefully, all of you had a great Christmas holiday season. Now we're into the new year, and I know for many of you, you're probably glad to have taken a break from Forex trading. Myself as well. I normally take a couple of weeks off, and I try to just clear my mind from all of the forex trading that I did for 2016. Just thinking about trading every day, trying to perfect strategies, trying to trying to do as well as possible as all of you are trying to do as well. So, we're back into the new year, and I think we can all reflect back upon last year. Look at or try to reflect upon the things that you did very well. Obviously, look at the things that you did very poorly at, and for most people, the big problem, the number one problem is your emotions most likely got in the way, forcing you to make some bad decisions. And probably the one of the biggest problems is allowing a losing trade to lose a lot more money than you had even thought of. Perhaps you even had or were working within an overall risk factor of 2 or 3% of your overall account balance. However, you let a losing position go far beyond the 2%, and you're wondering why that happened. Well, again, emotions. When you're involved in a live trade, emotions can often get the better of you, and it's really important to know how you react to making bad decisions. And perhaps at some point in the future, I'm going to present another video on emotional trading, some of the things that you can do. Obviously, some of the tricks I've learned over the years, and I want to share that with you. So hopefully, I can do that at some point soon. Now we are looking at weekly trading opportunities for the week of January the 9th to the 13th, and the big theme for this week is mixed signals. There aren't a lot of really clear directional trading opportunities. We kind of have to have some patience, okay? And uh, so that's the important thing for this week. Just have some patience. I'm going to circle that. It's one of the things that everyone will have to work at for this new year. And having patience, waiting for the right trading opportunities, it's what's going to help you make money. Okay, so let's get right back to the charts, and we're going to start off with the Euro USD. Okay, so just a second here. I'm going to switch this to the charts. Here we are with the Euro USD daily chart, and you can see last week, the end of last Friday is shown by this vertical red line right here. So that's the start of, the start of last week is actually with this very first candle. This red line signifies the end of the Friday on the previous week. And so we have 5 trading days with this charting platform. And you can see price actually rounded out here at the bottom. It kind of touched the bottom once, twice, and then with a lot of momentum moved up quite higher. And on Friday, with Friday's trading, we had a bearish candle, primarily due to what was going on with the non-farm payrolls, the news that came out of the U.S., and that might have had something to do with this. So now what can we expect? Well, you can see price with this bullish candle closed above closed above the 21 here, and price is still above the 21, even though we had a bearish candle. So I expect kind of price to go sideways for a bit, but in the short term, I believe we have a good counter trend trading opportunity to the upside. If you want to wait for a breakout, you can look for a breakout above 106.20, which is right there. Okay. And for the downside, if price continues going down, you want to wait till we get below this white bullish candle. So you want to sell below 104.70. If it closes below there, if price closes below 104.70, then price most likely is going to go down further. But I think in the short term, price is going to go up. The momentum, you can see the MACD right here is still to the upside. The actual MACD line has crossed the zero, indicating further strength to the upside. Okay, so that's the Euro USD daily. Let's quickly go to the LEOD chart for those of you looking for trading opportunities. You can see here, this did show you an entry right here with the end of this white candle. It had broken above the upper yellow line. For those who are patient, waiting for a retracement, getting in around here would have been a great idea, would most likely be a good idea because I think on a short-term price is going to go higher to at least the next resistance, which is the 50 simple moving average. You can see that right there. Okay, so momentum still to the upside. Now we get to the British pound USD. And again, you can see what happened. Kind of went up, down, up, 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 down. So kind of we're in a sideways pattern here. My position on this is neutral. In other words, I'm basically saying wait for more evidence. However, price may come down lower. You can wait for a bounce off the support. You can see that right there. And that's why I have that little arrow showing here. So that's kind of waiting for if we do have a bounce off the support, in this case, dynamic support of the trend line, you can see that's drawn in green here, as well as the gray rectangle, which is more of a static fixed support zone. Okay, now if price breaks below here, we may have still good opportunity to the downside. It can still There's still lots of room to the downside. Take a look to the left. Okay, right over here. That's a low, and that's the 12000 level. So if we were to take our crosshair tool, okay, um, just a second. So with the crosshair tool, you can see if price breaks below this area here, we still have a lot of room to the downside, at least 130 pips. Again, taking a look at the left over here, okay? Then at this zone, this major support zone, I would certainly expect a bounce to the upside. So if you're waiting a little bit, and if you have the patience, again, according to the theme for this week, having patience, waiting for more clues, then you just wait for price to come back down. This would be an excellent area to take a bounce trade to the upside. Okay. And that's the British pound USD. So here, again, you could take a sell trade below 121.50. Below 121.50. Okay. Uh, Here we go. You can take a look. There's room still to the downside. Of course, it breaks the lower trend line on the LEOD chart. There's still room to go to the downside. Now we get to the Australian USD, and that's tied into the commodities, in particular gold. Also, the strength or weakness of the Australian USD is tied into the strength or weakness of the Chinese yuan currency. And anyways, the Australian dollar, the Australian USD has made a nice U-turn. You can see that right here. I'll just draw that in for you. So prices come down and it looks like it wants to go higher. We had a bit of a bump in the road here with this bearish candle, okay? And so what can we expect? Well, price has closed above, with this bullish candle, has closed above the 21. Prices below the 21 with this black bearish candle on Friday. So I expect in the short term, uh, price probably most likely to go slightly lower. You can wait for price to go lower, but it's got to stay above the 8 here. And um, what you want to do is wait for price to continue going higher in the direction of the uptrend here. And you can take a buy above 0.7350. Or if price continues going down much lower, then you can certainly take sell below 0.7250. Okay, so momentum is fading a bit here, but it just means that price could go sideways and you want to wait for further evidence, that evidence being to the upside here with this arrow, to the downside, or to the downside here. I kind of think price may still be going a bit higher. And again, that may depend on gold, which we're going to take a look at right now. Gold has been going higher. You see, we stalled a bit on Friday. Same thing here. Price bottomed out. It's on its way higher. I do think the gold in the short term, it's going to go higher again, as I've indicated with this arrow. Okay, so let me just take that off. And now we get to the New Zealand USD. Now, this one seems to be heading down. Okay, and what we want to do is sell below 69.48 right there. Okay, so you see that where my cursor is? Where my mouse cursor right there. So we want to sell below 0.6948. However, um, if price goes down lower, it's going to come down to at least test this trend line. You can see that I've drawn here, joining the bottoms of these wicks of these candles. However, it may break that as well and come down all the way. You can see we have a channel forming with this red upper trend line, this lower red trend line. So price, in fact, um, could be coming to here and then coming all the way down to here to retest the bottom of this channel, and then at this point may bounce back higher again. Okay, so again, just be aware of that. And what else can I say? The other thing is, if it turns around for whatever reason, then you can certainly have the patience again and wait for price to move above the 0.7010 area right here, 0.7010 to take a buy trade to the upside. Again, the next resistance, take a look, everyone. Next resistance, you can see we have a converging of the two major trend lines. Here's the 50 right here with this red line, and this dash red line is the 200. So, and then we also have this upper trend line coming down. So right here, somewhere in this area, price could come all the way back to this area before perhaps bouncing down lower again. We could even extend. There we go. Now we've got a massive convergence of resistance. So four things to look at: the 200, the 50, the static resistance of the gray rectangle, and the upper trend line. You can see right here. I mean, if price breaks this area, that's a massive boost by the investors' confidence, thinking that price is going to go much higher. I don't think so. Right now, we're stuck in this channel, and price, I believe, is going to come down in the short term much further before it goes higher. Okay, and so that's the New Zealand USD. Really quickly, there's the LEOD. So again, you can wait for a break. Just a break below that yellow line there, price should come down a lot further. Okay. Now we get to the US CAD. So what's going on over here? Well, First of all, this is tied into the price of oil. Oil has actually been doing pretty good, been going up. We'll take a look at that in a second. And on Friday, it also stalled, as we have here a doji on the currency. You can see it stalled as well. Now, in the short term, I believe price is going to come down. Okay, we have huge momentum to the downside, so price could come down further to test this trend line, could come down all the way here to test this gray rectangle and the 200, which is again really, really strong, a really, really strong support zone area. And then we can expect to bounce higher. So that's why I've got that arrow there. If price goes below that, then you can obviously look at sell trade to the downside. I doubt it though, because of the strength of the US currency by itself. US currency is still fairly strong despite, despite the not so great non-farm payrolls on Friday, but I expect price to bounce up higher pretty soon, so just watch out for that. Okay, and what else can I say about that? Um, Besides more room to the downside before bouncing higher. So you can also the long-term traders and having the patience, you can wait for a buy above the 132.70. So right there, do you see that with my mouse? That's the 132.70. You could look at taking a buy trade, and then it should go much higher as well. Okay, so now really quickly, okay, you can see so more room to the downside on the LEOD chart. Oil, real quickly, you see oil has gone up. Last week, oil came down, tested the trend line where the green trend line is, and had some really good up days, but it's right here stuck at resistance. Resistance being around the 54, 5,500 area. Will the price of oil go much higher than that in the short term? I don't know, but again, you can watch the price of oil and also help you gauge what's going to happen with the U.S. Canadian currency. Okay, so now we're going to head right off to the U.S. Swiss franc. And what do we have here? Well, we can see last week we had a huge bearish week. Okay, look at the weekly. Yeah, two big bearish candles in a row. And then on Friday we had a big bounce up candle. So right now on Friday, the Friday's bullish candle is below the 21, below the 8. I expect further movement to the downside. However, we are in a wait and see situation. What that means again is we're waiting for more evidence. So I wouldn't do anything with this right now. I mean, if price comes down to this area, do you see that with that red arrow? Okay, then you could look at taking a sell trade. I'm sorry, sell trade somewhere below 10040. Okay, it would actually have to close below this area for you to consider taking sell trade down to this moving average, which is the next support zone. However, right now I think price is just going to go sideways a bit, and then you can wait and see if price goes higher. Here's the you can take a look at taking a buy trade above 102.20, which is right there, 102.20. A buy trade if price continues going higher. Again, you can take a look here. We're kind of stuck in no man's land for on the LEOD chart. Now we get to the US Japanese yen. And let me just scrunch this chart down a bit. Okay, so this looks like a really interesting pair. It kind of looks like it's going to go higher again, doesn't it? Right? Um, but we're kind of stuck at a resistance of the 8 moving average right there. If price goes higher, again, the theme of this week is patience, and that means either strategically putting in a buy stop, uh, a buy, a pending buy stop order right here. Okay, and the price on that would be, let's take a look. Buy above 117.50. Okay, 117.50 for buy stop right there. Or a sell stop here, the other way around, with a close below 116.20. Okay, 116.20. If it comes down much further, like it comes down further to here, it's got a long way to go. There's a lot of pips to be made here, but once it gets to this gray rectangle, this support zone, again, expect to bounce higher. So this one, again, you may have to have a little bit of patience, but certainly if it goes higher, I expect it again to retest the resistance zone up here. Okay, and now we get to the LEOD. Same thing. You can see it wants to break higher. Um, so again, above the high, I mentioned 116, 117.50. I'm sorry, 117.50 for buy trade. Okay. Let's go back for a second. Okay, so the MACD line is kind of right at the zero. The momentum is fading just a bit, and again, it's a wait and see situation. So, with all of these, um, the analysis I'm doing on the daily charts, yeah, again, it's important to not jump into trades right away. Be very careful, especially if you're trading the longer term charts like the daily charts. You may have to go down to the 4-hour charts to look for better entries. If you have time for the day during the daytime, you may even want to go down to the hourly charts, right? So again, be careful for this week. The U.S. currency is still trying to um, showcase its strength. It hasn't done that entirely just yet, but at some point, again, they are talking about raising their interest rates. So we can all look forward to that. Again, depends on what Donald Trump is going to do, the new president of the United States. I think the markets are basically favoring strength in the U.S. currency because of some of the positive things that Trump is talking about. His administration is going to try to enact, and that could be good for the U.S. currency. So it could be in the near future, we could have a great spring, and the U.S. currency could surge forward. So that's my take on what's happening for this week. Everyone, take care. Happy trading. If you want to contact me, you certainly can. Okay, and let me just show you one thing. So for some of those traders, or some of you new people that have caught on to my videos from around the world, different parts of the world, if you want more information on courses and learning materials, you can contact me. That's me right there, Martin, and the email address is mskyj007 at gmail.com. That's for those people that perhaps would like to get some more information as to what I'm doing, my courses. I actually do teach live in classes here in the Toronto area. That's Toronto, Canada. And again, if you want more information on what I can do and how I can help you, and I certainly can help you, then please feel free to send me an email and I'll get back to you as soon as I can. So take care, everyone. Happy trading for this week, and we'll talk to you again soon. Bye for now.